everyone, welcome back to the channel. In today's video I would like to talk to you about one of the most important and often misunderstood processes in investment banking, which is the profit and loss attribution. If you are a business analyst or just in the early stage of your career, then this is the topic that you will hear a lot in investment banking, and understanding of it will make you really valuable there. So if you're new here, I'm business analyst, I'm working in investment banking, and I'm also MBA and CQ qualified. Let's start from the basics. So P&L attribution means taking the trader profit and loss and breaking down into the clear causes, understanding why actually that P&L has happened. Here is the simple example. So let's say trader made $1 million a day. So this is incredibly great news, but behind that, banks wants to understand how did this happen. Was it because of the market move in their favor, or maybe interest income from holding the bonds? Other reason could be maybe there was a FX gain, or maybe there was just literally a new trade that made them such a big profit. Now imagine opposite of the story. The trader lost $500. So there could be many reasons behind it, and one of them it could be maybe there was interest rate, some sudden changes that could impact that, a pricing model bug, or maybe there were issues with the booking of that trade initially. So the P&L attribution splits the total number into the buckets. At the high level it can be like market movements or the risk-based P&L. We also can have a carry, which is the interest earned over the time, or maybe the new trader sells, or also the cancel trades, which also contribute to the profit and loss on daily basis. So you may ask, so why go to all this trouble to create all of this reporting, looking in the calculation? So in one word, this is transparency. And why this is matter? Performance check for the trader. If you made a smart trades, this is great. But if you made a lot of money because of the market move significantly, this is unfortunately might not last. For example, a trader buys oil futures, and if the oil prices they jump significantly overnight, so of course this will contribute to significant profit for a trader. But the profit and loss attribution, it will show exactly that the profit was purely made because of the price movements and not from active trading skill. Management oversight. So bank management, they can see if the profit comes from acceptable risk levels. For example, if the desk show high profits, but this profit mainly driven because of the risky deal, so this is a great opportunity for the management to step in before it's late. Regulatory compliance. Regulators wants to have a proof that bank understand all their sources for the profit. And then of course error detection, because of if P&L is unexplained, that this can lead to some bug in the system. For example, there is a sudden $200,000 of the gain, but looking at the whole indicator, nothing can justify this. So it turned out that it was a double book trade. And if you're a business analyst, you're the one who will be helping to contribute to ensure that the profit and loss attribution processes in the bank run smoothly and correctly. So this is how it works in the practice. Requirements documents. For example, you are working on the enhancement of the UI view of the risk engine system, which produce and reports the profit and loss to the traders or product control. And one of your role will be to deciding what is the correct split. Basically, you will be gathering requirements from the business and your stakeholders, and you will be building that correct UI view, for example, for the profit and loss split. Is this should be by currency, by traders, by portfolio, or maybe by other significant indicators that should be added there. Then of course you're working with the MQA, which is the quant team and developers, to make sure whatever system is producing is correctly. Testing outputs. You're the one who will be running user acceptance testing to ensure that numbers for the profit and loss attribution are produced correctly. Reporting and dashboard. You will be designing what the best way to produce and to show the profit and loss for the traders and management when the profit and loss attribution is wrong or missing. So of course this will lead to a lot of, I would say, not a very happy scenarios. For example, traders will not trust the numbers, finance will not be able to sign off on the book, regulators, they will demand the fixes, but in the worst case scenario they will issue the fines. Here is to remember P&L attribution, explaining the why behind profit and losses in the bank. It's critical for performance review, risk control and regulatory compliance. And business analysts are the bridge and making sure that all the system, data and logics are lined up. If you enjoyed this video, you might also like this one, and please don't forget to subscribe if you haven't yet. And thank you very much for watching me, and see you in the next video.